Okay, the last thing we're going to be looking at here is we're going to be looking at bonds payable account in the financing activity section. So with this, you've had $150,000 in bonds payable. Remember, we're talking about usually a long-term liability here. And you've got $100,000 left at the end of the year. So the question is, what happened, right? And what happened was you retired some bonds early. What that means is you paid them off. Bonds payable, remember, a long-term liability because it's money that you raised. You issued bonds from your company, and what you did is you basically told people, we're going to pay you a certain amount of interest over the next 10 years or so, and at the end of the 10 years, we're going to give you back all of your money, your principal balance. So really, it's kind of almost like a long-term loan, but to individual people versus like a loan with a bank, right? Just a little bit of a refresher from financial. So what's happening here is you're paying off $50,000 worth of that. So when you do that, that's going to be a cash outflow because you have to pay those people that money. So you come on over back to your cash flows from financing activity statement, and you're going to have also cash to retire the bond. And that's going to be, as I said, a cash outflow of $50,000. So in total, you have from here, I'm going to steal this, you have net cash flow from financing activities, in the amount of, let's see, negative $26,000. Okay, so when you look at all, when you look at all three of these together, you've got $100,500 from operating activities, cash inflow, and you've got outflow of $3,000 from investing and an outflow of $26,000 from financing. So at the end of the day, what you'd say here is you would say total cash, well, hang on a second. You'd have total net cash flow, and you're going to add these three numbers together here. Your total net cash flow was $71,500. Okay, so now take 1 second and go way back to the beginning where we started here. And let's look at what the cash account was in the PowerPoint. Remember that number was $71,500, right? So now let's look at our change in cash from last year to this year. We went from $26,000 to $97,500. Hey, look at that. There's that $71,500 number again. So the way you know you've done this statement entirely correctly is when the cash change is equal to the cash amount here, the total cash flow. Alright, so that's basically how you prepare this. Just for a second, let's step back and take a look at this analytically. It looks like, if I were to analyze the statement, I would say to myself, wow, alright, they're doing pretty well. They've got cash flows from their operating activities. They brought money in. They brought good money in. They are a functioning operating business. That's where they get the most of their cash that they're working with. But from investing activities, if you were to look at it, you'd say, wow, they have an outflow in investing activities. That's not a bad thing. It looks like they're buying land, they're buying buildings. Those are all good things, right? And cash flows from financing activities. Again, not such a bad thing because they're using their business, they're running their business based on the money they earn from operations. They were able to retire some bonds, they were able to pay out some shareholders some dividends, they were able to do some pretty good things here. So cash flow from financing activities is also not necessarily a bad thing either. Alright, so big picture wise, this company is doing pretty well. So with that, I think we're just about done. Let me see if there's anything left I want to talk about. Okay, the last thing I want to show you guys is that here it is. Here's the final statement, if you will, the formal version of what we've just done here. Oops. Laid out just slightly nicer than how I had it laid out. So here we go. Let me move it a little bit so you can see the whole thing on one screen. All right, you've got the same things I've got here: $100,500, negative $3,000, and negative $26,000. They do something a little bit different here on the bottom, but I'm not really worried about that. At the end of the day, the increase in cash was $71,500, which matches what we had on our balance sheets. So we're good. So I hope you enjoy the statement of cash flows. If you need to rewind me, fast forward me over and over again, I have no problem with that. Good luck with the chapter, and let me know if you have any questions.